Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 24th of April. And starting off with the FTSE, where we're in this sideways consolidation, very tight consolidation, which should bode well for a new move to the upside. End of day close through 79.30 is what we're looking for. That will give us hopefully a retest of the intraday record, 80.47, that we had back in February, and then on to 8,250, which was or is the top of that rising September trend channel. Hopefully by the end of next month, i.e. by the end of May, if we can get a quick end of day close through the 79.30 level later this week. Backed by the 50 and 200 day moving averages rising. RSI at 63, so not too overbought yet. Moving on to the DAX, and here it's all about the DAX remaining above 15,700, which it's continuing to do. That was the old resistance for February, March, and we found new support at and above that level. Top of the channel here from September as high as 16,500, which we're looking for over the next month or so by the end of May, ideally, while we stay above 15,700. On the downside, if we break down, then it's the 50-day moving average at 15,400, but not expecting worse than that given the way that the 50 and 200-day lines are both rising well. On to the Dow, where the wait for that break of the main resistance line from this time last year continues. We had a reasonable end to the week, so finding new support there at initial April resistance around 33,700. Above that, looking for a break of 34,100 to lead up to 36,500 over the following 4 to 6 weeks, or maybe a bit longer, but end of May going into June as a best case scenario there on 36,500. If we break down, not expecting now anything worse than the 50-day moving average at 33,100, but obviously one can always have horrible geopolitical or economic events to ruin things on the Dow. On to Bitcoin, and here slightly disappointing, I suppose, in recent days with the move back to the 50-day moving average. We're hoping that we would just stay above 29,000 and go to 32,000 at that June resistance line projection, but if you'd asked anybody at the beginning of the year when the market was around 16,000 where you hoped the Bitcoin would go to, I think 27,000 would be quite a result would have been quite a result at that time. Haven't quite touched the 50-day line, so I suppose we're still waiting for that to happen. But if we do break back below that, then old resistance at 25,000 could be the next destination with this market. But really, not expecting worse than that at this stage. In fact, we might even get away with just remaining near the 50-day line before heading up again. On to the stocks, and a lot of stocks in the Bulletin Board Heroes from, today, which were actually featured yesterday, which is always a good thing to happen. Makes one feel that the charting works. Here we've got Angle, which broke a line of resistance there from January in the 50-day line at 23 pence. Above that, we're looking for as high as 42 pence by the end of next month, and an end-of-day close above March resistance, 27 pence plus, would really help the cause on that particular call. Moving on to Caracal, which is improving by the day, I suppose one could say. We've had that rising 50-day line, which has helped this market really since the beginning of the month. Looking for the 0.61 pence level, which is that January resistance line projection, just above the 200-day moving average at 0.58, and hoping 0.61 could be hit by the end of next month, and hopefully much sooner. And on the downside, only really back below recent 0.38 support would really delay or question the build there, but really backed by the rising 50-day line and the double, triple bounces for the RSI at the neutral 50 level, which tends to be a decent continuation signal as well. I was heaping praise on Chilbrand's yesterday, and I suppose one has to heap a bit more praise on it today. Here we were looking for the top of that rising trend channel from January up to 7 pence, and hopefully we'll get that by the end of next month. The way things are going, we might even get that by the end of this month, but looking very strong indeed for Chill, and actually giving the implication here that 7 pence will be the minimum on the upside. In fact, probably already be looking for wherever that line is pointing to, which is 10 pence plus, over the next 1 to 2 months. But just let's go for 7 pence while we remain above the initial April resistance at 5 pence. On to a stock which is not a momentum play so far. It's first in. Here it looks as though we're just starting to get our act together at the bottom of that broadening triangle from back in the autumn last year. V-shaped bull flag at the lows, which looks very encouraging, pushing back above RSI 50 as well. And what we're waiting for here, I suppose, is an end-of-day close back above March support around the 8.25 pence level. If we can get that, then the initial target here up to 11 pence and then up to as high as 17 pence by the end of next month. And the stop loss back below around 7 pence really should do the trick there. Another nice recovery situation is Galileo, which where the call was that the shares were going to find their floor near to the 1 pence level. It went down to 0.96, 0.95, but the start of the build here was actually that unfilled gap to the upside off the lows, which tends to be a reliable signal. Obviously it worked going into October, but then the shares came back, but they still found support above that gap and then broke that resistance line there from October. Looking for 1.8 pence at that September 2021 resistance line projection. Hopefully we'll see that well before the end of next month. And the other point to note, which is helpful, apart from the bullish divergence line, which did work there as well, going from February to April, is that both the 50 and 200-day lines are now both rising. That suggests that we're going into a golden cross, and the run-up to a golden cross tends to be the strongest part of the cycle, which is indeed what we are seeing at the moment. Stop loss at the moment, even back below the 200-day line at 1.25 pence would probably be sufficient on a mid-close basis, but ideally we just stay above the 50-day line around 1.1 pence level. Moving on to Genflow, which I think has some news today, and here we're looking at a situation where the shares have found new support. Looks like they found new support around old resistance, 3.5 to 4 pence. Above 3.5 pence, we're looking for not only a retest of April resistance at 5.5 pence, but up to 7.5 pence by the end of next month. The reason for the relative enthusiasm here is the way that both the 50 and 200-day moving averages are both rising now, so that tends to be a very strong part of the cycle, as I've just said. And we also had a bear trap gap reversal, unfilled gap to the upside off the lows, which is a very strong signal. And I think actually you could almost only trade off that and probably do rather well in the market without wanting to give any special secrets away. Moving on to HeliumOne, and here we've had a decent break of the 200-day moving average, the first proper one since November. That obviously failed with the bull trap through the 200-day line, and it was actually quite a nasty bull trap. In this case, though, we've managed to push through the 200-day line as if it wasn't there, like a blowtorch through butter, and looking for an initial target there at 8 pence, and then maybe by the end of next month, as high as 10.5 pence at that July resistance line projection. This stage only well below the 50-day line around 6.25, really questioning the ongoing recovery here. And as you can see there, we had that bounce off the neutral RSI 50 level, which has helped the latest push through that 200-day average. So barring any horrible nasties as we had in November, we should be on our way. On to Hummingbird, which I interviewed last week, and we've hit one of our targets here, which was 15 pence, rather easily. I think the high today nearly 16 pence, but above 15 pence on an end-of-day close basis, above that 2-year resistance line. We're now looking for 24 pence to be hit as soon as the end of next month. As you can see, we've got the 50 and 200-day moving averages now rising, so things looking pretty strong there. Upside valid at least while we're above initial April resistance around the 13.25 pence area. Moving on to Harland & Wolff, where it looks like it's maybe second time lucky in terms of re-establishing the the break higher that we had back in November. Here we've pushed through that November resistance line. We've got a rising 200-day moving average, which I think should power the shares up to a retest of the best levels, maybe by the end of next month. And decent risk reward here as well, that in the sense that above 13.8 pence and the 200-day line, we're looking for 26, 27 pence over the next 4 to 6 weeks. RSI looking good as well. We've sort of bounced off that neutral 50 area, so that helps establish confidence. Moving on to Shield Therapeutics, which I think I did cover earlier in the recovery here. We have now hit one of our targets, which was the 8 pence level, and also hit the 200-day moving average. End of day close through 8 should be enough to give us 10.5 by the end of next month. So looking rather better there. And upside valid while we hold above 6.9 pence at the 50-day line. Don't normally look at stock with this kind of market cap, and I have to say that THG was horror back in March with that bull trap through the January peak through 70 pence, and then coming back with a bear trap rebound from below 52 pence later that month. But now, with the V-shaped bull flag, one feels rather more confident that the shares are on their way. It also helps that the 50-day line is rising, and probably if you look closely, we've got the 200-day line rising as well. End of day close above the recent peak, 97.3 pence, could be enough to open up a target here as high as £1.20, but obviously this is a very volatile situation, because presumably there's still quite a lot of distressed sellers in there. But £1.20 valid, at least while we're above the 90 pence zone on THG. One would want to risk more than that. One of yesterday's heroes has become one of today's heroes on UCOG. We were looking for 0.12, 0.13 as best case scenario. We hit 0.13 today. If you're looking for further glory on the stock and trying to ignore the spikes on the chart, the next level up, 2-year resistance line projection as high as 0.18, and I would say that was valid while we hold above the recent resistance for the shares around 0.10, so 0.10 up to 0.18, but probably wouldn't want to risk more than that if you are a stop-loss minded kind of person. Finishing off with United Oil and Gas, which has also been a stock which has been trying to get its act together in the recent past. Nice bear trap rebound from below the 200-day moving average there at 1.5 pence. Above that, we're looking for 2.2, and then as high as 3.5 pence over the next 1 to 2 months. But ideally, this is the last time the shares will have to test the 200-day line as support. If that is the case, we are looking good. That's it from me today. More updates tomorrow.